in this Monday afternoon, we start with a big story this hour, the Adani issue, which continues to flare up across the country, with the opposition making it the top focus. The visuals on your screens right now are from across the country, the protest which was staged by the Congress workers in cities including Mumbai, Bengaluru, Chennai, Hyderabad, Jammu and even the national capital. Well, we are also given to understand that the Adani stocks continue to trade in the red. With the market now ending, the trading ending for the day, but putting out those stock prices as we speak. Adani Enterprises that ended over 1% low at over a little above 1500 mark, and several of those stocks that continue to plunge in the market trade today. We have Rohit Srivastava joining us. If I can get your thoughts, your reading of the market sentiment as of now, what we're given to understand is that even as we see a lot of discussions being that have been happening over the last few days, the market sentiment is quite negative as we speak.
Well, it does take time for sentiment to settle down, but if you actually look at the price action of the Adani Group on Friday itself, we saw prices recover from a low. For example, Adani Enterprises hitting 1017 on the low, and then coming back to 1600, which is like a 50% recovery from the low. Now, of course, it's still way down from the highs, but I think that part of the impact is sort of digested. I mean, today's decline in the market, I wouldn't really attribute it much to the Adani Group, because Adani Ports is actually up 3-4%, and 1% decline in Adani Enterprises doesn't really count much in the overall scheme of things. I think what is really happening is markets are now starting to behave and respond to global cues, is what we are seeing today. And I think even because, after this big decline, if you actually look at it, Nifty doesn't really have that much weightage in the of the Adani groups in itself. Already the weightage at the start was not more than, say, 2%. And now with this fall, it is further lowered. And that means its actual impact on day-to-day movement of the main index is not so much. And if we actually look at the alternate index, which is Sensex, it has none of the Adani stocks. So the impact is mostly on Nifty and limited only to that, small weightage that it has. And so I think somewhere, the market's going to slowly, start overlooking this issue in the days ahead.
Saying that the macro picture continues to be bleak at this point, but the Adani promoters have posted amounts to prepay almost $1.5 billion ahead of the maturity, which would happen by 2024 of September. Do you think that would some way assuage the concerns of the investors?
Yeah, definitely. See, they've tried to come across with some news flow. For example, we had the Fitch ratings on Friday. We have this discussion of them being able to repay some of the loans and lower the debt levels. Because partly raising equity from the market is the whole idea of any company is to reduce the cost of capital, which is a combination of cost of debt and cost of equity. So you either raise equity at a high price or you raise debt at a low cost. Either way, you need to reduce the cost of capital to make the company's financials continue viably. So in the long term, so it's not so it's something that any large concern which has grown will tend to do, because any company that you've seen historically that has grown in the infrastructure area usually has a high leverage ratio, but eventually they need to bring it down with future cash flows. And I think that's the process that Adani is going through. And this has been one of the first, major hurdles they faced in the process. Any news flow which, helps us feel that, yes, they are able to manage finances better, or that the, underlying risks are lowering, then I think markets would take that positively.
So simply put, would you say that the market experts, the investors abroad, are still bullish on the Adani stocks?
Well, global investors are tough to say. I mean, see, just look at the shareholding. Like, you have 75% with the promoter group, you have 20% held by private investors. There's less than 10% really with the public. And public or institutional investors. So it's really a very small percentage on which to comment whether the feeling of foreign investors matters, and to what extent it really matters when their shareholding is really that small.
Also, if you could throw light once again on the exposure that LIC and SBI has when it comes to Adani Group, it's less than 1% is what we're given to understand. If you can put this into perspective for us, how much of that amounts to less than 1% that LIC and SBI exposure they have with Adani Group?
Yeah, so if we look at each of these stocks, say for example, State Bank of India, the amount of decline or correction we've seen recently in SBI would be far greater than, even if there was a significant write down of the loans that they have given to Adani. So the market has definitely overreacted when it comes to individual stocks. The exposures they've already explained. In fact, they also don't have any, pledge shares with SBI or, any of these banks. So what happens is when the stock price really falls, if you did have pledge shares and if it was at a higher price, then you would have to call for margin from the promoter. And if they didn't pay up, then you would have to sell. That kind of pressure, similar like margin funding pressure that comes on individual investors, that kind of pressure ends up coming on the promoters, and then that loss ends up being with the bank. Now, the bank has mentioned that they've really not, given any loan against shares. So that also is really ease for the bank itself.
Also, we understand that one of the stocks of the Adani Group has been put under the ban for trade this morning, which of course has ended for the day. But what does this really mean in the long term for the Adani Group?
No, see, wherever there's a significant price move, I think the exchanges have these guidelines in terms of where there should be a price freeze. So we'll see how this really translates, in the days ahead. As long as the major group names are not affected, I think every company goes through something like this. But of course, we haven't seen it where it really hit the media at large. There have been groups in the past where many companies were listed. Some of them got delisted or are no more or got merged back into some of the existing companies. It did not create a furor, but because of this report, it has sort of had a sense that everything matters. So I would really have to look into. I think so far it's just volatility management as far as the exchanges are concerned, which is part of their process.
And also the fact, we've seen in the last few days how the market cap has eroded to a significant extent. But the very fact that the promoters have decided to repay the amount, to prepay, to be precise, $1.5 billion ahead of the maturity in September of 2024, do you think that would in many ways allay the concerns of the global investors?
Well, it should. I think what they'll really have to also do is spend some time, with the rating agencies or any of the banks that are, trying to downgrade the credit or, raise issues. They would have to probably share additional or fresh information with them and, get them to upgrade or, restate their ratings for the company. That entire process takes a while. And once done, it definitely will improve the foreign investor approach towards the Adani Group.
And talking specifically about the cement sector, that contributes significantly to the business of Adani Group. How much of that has really taken a hit post the Hindenburg report?
Whoever I have spoken to, especially those who are, doing fundamental research into the